Hello and welcome to The Property Show. I'm Andrew Montlake and with me is my co-host Louisa Fletcher.
We're here to talk about all things property. So whether you're staying put, buying, selling, renting or letting,
we'll be chatting through the latest news on the housing market and mortgages, as well as sharing our advice and expertise to help you get the best from your home. Today, Lou will be looking at how the UK housing market works as we try to make sense of the latest property boom.
Plus, Monty will be talking about mortgage prisoners and explaining why this is such a serious issue for thousands of homeowners, as well as bringing us up to speed on the latest crop of mortgage products. We're here to help you make money, save money, and most importantly of all, protect yourself, regardless of where you are on your home ownership journey.
You all ready, Lou?
Firing on all cylinders, Monty.
Hello everyone,
Hello.
Lou is here and apparently Lou is firing on all cylinders this week.
Yes, yeah, it's the sunshine.
Have you only been on like half cylinders previous weeks? Then?
Yeah, I've been depleted of vitamin D. So,
have you?
Yeah.
The sun's shining.
Yeah, it's good. It's good,
It's a beautiful day,
Yeah.
and
it's
we're
nice.
in here doing this.
And we're inside.
There you go. So you're still depleted of vitamin D.
Well, I'll get some rays later, but it's just changes everything, doesn't it? Sunshine out the window just puts a very different perspective on life.
And do you know what happened this week, Lou?
What happened this week, Monty?
I had my first outside business meeting, proper business meeting
That's
in a pub garden. In a pub garden with a beer. And it was beautiful. It was like a brand new experience.
Yeah, see, it's all good. We're getting there. We are getting there.
I've got everything crossed, Lou. I've got everything crossed.
Yeah, keep them crossed.
And I also saw people that in my own company that I hadn't seen for a year. That's so bizarre.
That's got to be pretty weird,
like a
right?
little excited puppy.
Oh,
yeah, wagging my tail and everything. But anyway, while I've been doing that,
yeah.
You've been looking at the housing market and crunching the numbers again, haven't you?
I have. Yes, there was a lot of crunching that went on this week in particular.
There's a lot of figures.
There was a lot of numbers, yes. And we've kind of had the confirmation in the last few days of what you and I and a few other people have been saying for quite some time, which is just how busy things are. And the data that was released from HMRC this week is the hard evidence of all of that.
So go on then, talk me and the listeners through all that lovely data.
Okay.
And what it means.
So I think it's probably really important for me to give some context first, because actually when I was kind of putting together what we're going to be talking about today, I realised that, you and I look at these numbers every day, but a lot of people listening probably don't.
Yeah.
So whenever I sort of talk about in very excited tones, how many properties have sold each month, it kind of occurred to me that a lot of people listening wouldn't really understand why that's such a big deal. And also the things I'm about to talk about, whenever I sort of speak to, other people outside of the industry, and when I kind of run through it with them, they go, oh, you know what? That's really interesting. I didn't know that. So I thought, okay, well, if other people find it interesting, let's give it a go on here. So I think that the kind of macro picture is that there are just over 27 million chimney pots in the UK. So when I mean chimney pots, I mean a residential property that somebody could live in.
Yeah.
Okay. Now, when you break that down, just over 2 million of those are rented from local authorities, and around sort of 2.8 million are rented from housing associations, which means that there are around approximately 5.5 million properties that are rented privately. Okay. So that leaves us with approximately 17.5 million homes in the UK which are owner occupied.
That's interesting. Breakdown.
Okay. So that just kind of gives a bit of perspective. Now, of course, these numbers change all the time because, of course, new homes are built and people move in and out of the private rental sector, etc., etc. So it's a bit of a moving feast, but just roughly that gives you a sort of top line breakdown. Now, if you were to add together the total number of properties in the private rental sector and the total number of owner-occupied homes, you're looking at around about 20 million, just shy of 20 million available properties. Okay?
Yeah.
Because, it is quite possible and normal that landlords sell and buy properties to either add or relinquish from their portfolio. So we kind of have to lump those in with the overall big picture. So we've got our available pool of properties is around 20 million. And on average, the last few years, 1.1 to 1.2 million residential properties are sold every year.
Okay.
So on the best case average, that's looking at around 6% of residential housing stock in the UK changes hands every year.
So that's really interesting, but you're definitely starting to sound like
I'm sorry. And apologies to anybody listening to this, but I just think that's important to understand because that underpins much of what we talk about in terms of rising number of properties sold, house price inflation, in the event it occurs, a reduction or a correction in the housing market. It's all linked to this. It's all linked to the fact that there is a finite number and it's probably not as big a number. And this is the thing that seems to surprise people when I talk about it, that it is that it is only sort of 20 million properties, give or take, that are going to be available. And of that, it's such a small amount that is sold each year.
Yeah. So what does all that tell you?
Well, here's the other surprising thing. Well, it's not surprising for you and I, but it seems to be surprising for, other people, is that the average time between moves, so a homeowner to spend in their current property and then move home, is now 21 years. So,
wow.
Yeah. So that gives you a backdrop to what I'm about to say, which is...
That's really interesting.
21
I didn't
years.
realise it had gone out that long.
Yeah. So the reason that this is all of such consequence is because HMRC released the figures a few days ago for the total number of homes, residential properties, sold in the UK in March.
Yeah.
Okay. So on a seasonally adjusted basis, for anybody listening who's into that kind of stuff, the big number for March was 190,980 residential completions.
Wow. So
Okay.
that is a big number.
That's a big number. So again, just to give some context, the average number of transactions completed in a month normally sits at around 98,000. So when you look at it that way, right?
Yeah, it's a big number.
It is a big number. Yeah. So when, I speak to people all day, every day, and they're saying, the housing market's so crazy, I don't understand. Why is it so crazy? There you go. That's the why. There's a limited number of properties, possibly more limited than anybody maybe considers before all of that stuff is explained. And people are moving home far less frequently now, which consistently reduces the number of available homes at any one time for sale.
Yes. And that will have an effect on pricing.
Exactly that. Yes. Which is why we're seeing what we're seeing at the moment, which is on the one hand, we've got widely reported the lowest ever level of homes for sale since records began. Okay. And then on the other hand, we've got this incredible record month for completions last month.
Yeah, it sort of seems contradictory, doesn't it? It's crazy.
Yeah. Or alternatively, there's nothing left to buy because everybody's bought it.
Yeah.
But here's the thing, and again, I feel that this is an important sort of flag to raise for our listeners, which is part of the crunching of numbers I did this week. I looked into the figures historically in a bit more detail. And what I can now see, and what has indeed been evidenced, is the fact that the UK housing market in the first quarter of 2021 was officially busier than the first quarter of 2007, which of course
Wow.
was the housing boom.
Yeah.
And I've run the numbers, right? So,
Go on. What have you found?
So in the first 3 months of 2007, the total number of homes sold was just shy of 440,000. And I ran the same, so this is January to March, right? So I've run the same numbers for the first 3 months of this year, and the total is just over 455,000.
Wow. So it's higher for the first 3
3
months of
months, the first
2021.
quarter. Yeah.
Sorry, the first 3
Yeah.
months of 2021 than it was in 2007.
Yeah.
Blimey.
Yeah. So, if you're looking for a property to buy at the moment, this is why things are feeling more expensive than they would be normally, because there just isn't much out there.
It's crazy.
Yeah.
It is crazy. I knew it was busy. I mean, we can all feel how busy it is. That those of us who work in the industry and people looking for properties and all the mad stories that we're seeing.
Yeah.
So what's your take on all of this then?
Well, I think there's sort of 3 main points, I guess. So it's a great time to sell your house or home.
Yeah,
obviously.
Yeah, it's definitely a seller's market,
It's a
isn't it?
seller's market. So there just aren't enough in most of the major town cities, conurbations across the country. There just aren't enough homes to meet demand at pretty much all price points, to be honest. So if you wanted to sell, the chances are you'll be able to do so quickly and probably for a very good price. But of course, don't forget all things are relative, because then you've got to buy, presumably you've got to buy something. So I think that brings me on to my second point, which is unless more people decide to sell this year, then I think it's reasonable to suggest that house prices will, in most parts of the UK, continue to rise. And you can understand how we could get stuck in the current situation quite easily, because if you're thinking about selling, the likelihood is the next thing that you will do is check out the property websites like Rightmove, On the Market and Zoopla. And if you can't find something that you think that you would like to buy, that could put you off from selling. Because at that point you're thinking, well, there's no point in me selling if there's nothing that I want to buy.
Yeah,
right?
absolutely.
And then that perpetuates the problem. It keeps us in this cycle of a low level of stock. So it's a great time to sell, but it is potentially a tricky time to buy until such times as more homes come up for sale. And then I think the third point of all of this is, as I'm sure we'll be talking about later on, low mortgage rates. We're still looking at we talk about this every time, Monty, how reasonable the rates are. And especially, the reintroduction of the government-backed mortgages for low deposits, in the last week or so. So I personally think that's going to bring even more buyers to the market. It could get people who are in the private renting pool. So remember, we spoke about earlier, there's about sort of 5.5 million households in the private rental sector.
Yeah.
So it could be the opportunity to get some of those into, home ownership, but that's only going to work out if those homes are there for them to purchase.
Yeah.
But I do think that
really
this additional sort of, low access to sort of low rate borrowing, access to low deposit mortgages will probably just fuel buyer demand even further.
Yeah. No, you're absolutely right. I mean, none of it feels like rocket science, is
it's
it?
not.
It's just simple supply and demand. And while people feel confident about their finances and they're able to access mortgage borrowing at cheap rates, it's just likely to continue.
Yeah, I really believe it will. And, I would counter all of that by saying, of course, in every cycle, there is generally an event that corrects house prices, as we saw with the credit crunch, And if you believe what some analysts suggest, this is around an every 18 to 20 year occurrence. So if you believe that, then it's possible that some kind of correction could occur sort of 2026, 2028. Maybe. I mean, that's the thing, right? Nobody knows.
Do you know what? I've heard similar things from
So-
a couple of people who look at trends, and we're not there yet, but it could be 3 to 5 years away.
But I think that, and again, let's just sort of keep it real. However, going back to what we were just saying earlier, and again, you see, this is why I wanted to give these metrics for context, right? So if you bought a property now and we assume that you're going to be, on the average in this property for 20 to 21 years, even if a correction does occur in the next few years, if we look at history, the likelihood is that prices will recover and rise after that correction. So you're a good example of this, Monty. So you bought your house at the height of the last house price boom, didn't you?
Well remembered. You were listening.
I do listen.
Yeah, that's right. Yeah, we bought it in 2007, and I was worried I was buying at the top of the market, and then we had the credit crunch. But it's still worth basically double what we paid for.
What you paid for
back
it
then,
right? So that's the thing. So a correction in house prices is only really relevant if you are selling to cash out the market.
Yeah.
Because if you're selling at a point when house prices correct, but you are purchasing, then actually, in all likelihood, if you're buying something that's worth more than what you're selling, you're probably going to end up better off in the long run. Because if what you're buying is reduced percentage-wise relative to what you're selling percentage-wise, then actually you're getting a bigger discount off what you're buying.
Yeah.
Yeah. So I guess what I'm trying to say is this is all the natural ebb and flow of a housing market. And I don't think there's any expert in the country that could sit here and call the top of the housing market. I would love to be able to do that, but I can't. But what I can say with reasonable confidence is that right now, unless we suddenly magic up another 1 million homes for sale, I'm going to go with probably it's going to be like this for the next 12 months at least.
Yeah. You better get building, Lou.
Yeah. Well,
get your hod carrier.
I'm all right. I'm all right with brickwork. I have built a wall before now. I can do it.
I've built a few walls. They've all fallen down.
Yeah, I'm not gonna lie. You probably wouldn't hire me as a brickie anytime soon, but but anyway, so there you go. I just kind of felt it was worth us at some point taking the time to chat all this through, and I think that it was that data this week that made me feel now was a good time to have this chat with our listeners. So thank you for indulging me.
That's very interesting. There you go. That's very interesting as always.
Oh, thank you. Hope nobody's fallen asleep.
What'd you say? Anyway, just a reminder, you're listening to the Property Show podcast with me, Andrew Montlake, and Louisa Fletcher.
Now, Monty, a big topic. Certainly you and I have been talking about this between ourselves for a few months now, but it's something we've been promising to cover since we started our podcast. And I know this is a subject that you're very passionate about as well, which is the ongoing plight of mortgage prisoners in the UK. And this is a topic it's been covered again in the papers this week. But I think could you just explain for me and people listening, what is this all about? What is a mortgage prisoner? How did all of this happen?
So we're just talking about the credit crunch, actually, back in 2009, and basically it was born out of the issues that we had then.
Okay.
So basically, there were a lot of borrowers who merrily got mortgages from people like Northern Rock, and some of them were advised to do so. Some of them took their own advice and did it, and they took mortgages from quite a few lenders: Bradford and Bingley, Northern Rock, several other lenders that are no longer with us as a consequence of the credit crunch. Okay. So the credit crunch happened; these lenders closed down, and there was a lot of people left with these lenders. And the government, in their wisdom, when these lenders closed down, some of them sold their books. So they sold this pool of mortgage borrowers
Okay.
to other lenders
Okay.
and some to what's called closed book lenders.
So what is a closed book lender, Monty?
So basically, a closed book lender is someone it's a lender who doesn't trade.
Okay.
So they're either not regulated
Okay.
by the FCA and they're not able to sell mortgages. They're not able to do more mortgages. So they've just bought these clients and their mortgage books in order to make money.
I was going to say, so they're literally seeing this as a vehicle for profit. Right. Okay.
Correct.
Right.
Correct. So a mortgage prisoner is basically a homeowner who can't get a lower interest rate through remortgaging.
Okay. So why would they not be able to remortgage with a different lender to get away from the lender they're with at the moment?
There's several reasons. One is because out of the credit crunch came new affordability rules.
Of course. So this is the
which is understandable.
Mortgage market review.
Yeah,
which
2014.
Is when, yeah. Okay.
Yeah.
So this is when it got, we had to go to a lot more in-depth questioning to apply for a mortgage. And as you say, this probably got rid of, and forgive me, mortgages being your bag. This is when things like the self-certified loans became unavailable.
Yeah.
Is that right? Yeah?
Yeah, okay. Correct. So thanks to stricter affordability rules, banks and building societies might tell these borrowers that they can't afford to remortgage. They can't afford a cheaper rate. Even if you've been paying a more expensive rate for years.
I was going to say, but they've been paying a mortgage on a more expensive rate for...
Yes,
right.
But the new affordability guidelines mean that they don't qualify. And that might be that they've lost their job. It might be that they never really had the income in the first place. It might be that they've had lifestyle changes. It might be that they've amassed some credit issues because of all these difficulties. So it's an unintended consequence of an important change.
Okay.
So lenders granting these mortgages too liberally, and in some cases without checking whether the customers would be able to pay them back. So it made sense, obviously, for the FCA to ask banks to make tougher checks, and this is the unintended consequence of that.
Okay. So how many mortgage prisoners are there in the UK?
So we think there are around about 200,000.
Wow.
Wow. Quite a few.
Yeah.
However, there's been a range of studies on this, and there's certainly a lot.
So this dates back. Well, certainly the mortgage rules changed in 2014, right? So we're coming up to 7 years, and nothing seems to have changed for these people. Well,
look, the FCA have been tasked with making some changes, and I've worked with them on this in terms of trying to do this. And actually, they have introduced some new rules to help mortgage prisoners escape.
Okay.
So they've allowed mortgage lenders for mortgage prisoners to adopt a different set of affordability standards.
Okay.
The problem is that there are still rules within this. So you would need to have clean credit, etc. You have to be with one of these non-bank lenders, and only 4 lenders came forward: Santander, NatWest, West Brom Building Society, and Halifax, and have offered schemes for these borrowers. Okay. And since these new rules were introduced, mortgage prisoner campaigners say that only about 40 people have been helped.
Whoa.
So what the mortgage prisoner campaigners they're campaigning for, they're saying, look, it's not our fault.
No, I was
we took these mortgages in good faith.
Yeah.
And in a normal market, if I'd have been lucky to take out my mortgage with Halifax, and I'd become a mortgage prisoner because I couldn't move elsewhere, that would be okay, because actually Halifax have retention products. Even if you're in a bit of negative equity where the value of your house is worth less than the value of the amount of mortgage you've got, Halifax will allow you to switch onto another rate because they're a regulated lender and they look after their clients. But if you're with a non-bank lender who doesn't offer rates, you can't do anything and you can't go to another lender. So these, as everyone else has seen interest rates plummet since that time, and we can see the bank base is barely above zero at the moment, they've stayed on their high rates. Now, some of them have been draconian, and I think a lot of that has changed. So they've reduced some of the more draconian rates that were out there, but still they're missing out, and still they're on rates of 4 to 5%. When they've got low loan to values and they just can't move because of various reasons. So the mortgage prisoner campaigners have actually campaigned to say, look, at the very least, why don't you cap the variable rate, the standard variable rate that we can be charged if we're with one of these lenders? And why don't you cap it at a fair rate of, say, 2% above bank base? So at the moment, 2.1%. That doesn't solve the problem, but it could literally change the life of someone paying double that.
Exactly.
And who's paid that time and time again over the last few years. And there are so many sad stories. Some of these things lead to, bankruptcy or suicide, or you can imagine the financial strain and stress of all this, that you're trapped, you can't move out, much like we talked about with the cladding crisis. So basically, there's something went through the House of Lords last week on these standard variable rate caps, and the House of Lords voted in favour of an amendment which could see interest rate cap.
Okay.
Which is good. And Martin Lewis, money saving expert, he's been a fabulous campaigner on this.
Yeah, he's done a lot of work on this.
He's done loads and loads of work, really passionate. And that's great. But now it's over to the Commons. And the problem is that a lot of the MPs and government at the moment have already said that, no, it's not something we're going to do. I don't think it's something we're going to do.
But why would you not want to help people in this situation? That's the bit I don't get, right? Because obviously somebody's in a home and they have equity in that property and they've demonstrated over a period of time that they are committed to paying that mortgage. Why would you not want to assist them to run their finances in a healthy way? Why would anybody not want to do that? I don't understand.
It's really interesting. There are loads of different theories, and without getting too political and anything like this, it's I can only imagine it comes down to, actually, if you're one of these funds who've bought this mortgage book and you expect a certain return, to then suddenly say, actually, that return is not going to be there, we're going to cap that return, you're going to be pretty angry that you've bought that in the first place. Now, my point in all of this is, you're not buying assets. These are people.
I was going to say, these are people's homes.
So how dare you play with people like this? That you shouldn't be making money out of these people.
No.
So it's something that we're at the stage now. We've just seen the Super League. We've just seen football all come together and go, enough is enough. This isn't going to happen. We're going to sort this out. Same thing has to happen here. Same thing has to happen with cladding. Enough is enough. We've got to sort it out. These are people trying to do the best with their lives, and through no fault of their own, they're struggling, and we have to help them. So, literally, any MPs listening, I think we should vote for this. I really do.
I can't understand why, as an MP, you wouldn't want to do the best for your constituents. Why would you vote against it? Without being too political. But I have to ask, and this is just me sort of looking at it probably in a very simplistic way, But so we've heard all the news in the last few days. It's been trialled since announced in the budget, trialled for the last few weeks, that the government have introduced a scheme to underwrite lenders on what is deemed to be higher risk, low deposit mortgages. Okay. So if they can do that, why can't they offer a similar indemnity for lenders who take mortgage prisoners from these, non-bank, funds books, and offer them a remortgage if there's apparently some kind of element of risk because of affordability calculations, notwithstanding the fact that these people have paid a mortgage for however long they've paid a mortgage for. Why can't the government help and indemnify these borrowers? Why can't they do that?
Yeah, I mean that's one of the things that a lot of people have said. With will, you can do anything, and that's certainly something that can be done. But actually, at the moment, do you know what? The group are just asking to cap the rates. Let's at least make life bearable for many thousands of people by giving them some relief and capping the rates they're paying at the moment.
So when is this vote? Do we know when this vote's going to go through Commons?
Do you know what? I don't actually. Lou.
Okay.
So I will.
So let's keep an eye on that.
Out. Yeah.
Let's keep an eye on that, because it kind of feels to me that the more people that talk about this, that have a voice that perhaps other people don't, the more perhaps people may listen.
Yeah, absolutely. And Martin Lewis, he met the Chancellor Rishi Sunak.
Yeah, well, we've got the big guns on it. It doesn't get much bigger than Martin Lewis. Yeah.
And his quote I thought was brilliant, and we'll probably end on this. While the government chose to bail out the banks in the financial crisis, it has never bailed out the bank's customers who are victims of that collapse.
Very true.
And I think, time has come to sort this out.
So we will of course keep an eye on this, and as soon as we have more news, I think it's something that we should definitely include. If it's not news for the next podcast, definitely for the following episode.
Yeah.
Cool. Thank you for explaining that, Monty. Thank you.
Just a reminder, you're listening to The Property Show with Monty and Lou.
Now then, Monty, we're nearly out of time again.
We are. There are two chunky topics today.
Two chunky topics. But you know what? With all these things, I think sometimes it's just good to give people this information, because you never know. You never know who we might help, who's listening to all of this. But before we go, any mortgage rates have caught your eye over the last few days? Anything you want to chat us through?
It's all about the new 95% loan to value mortgages.
Thought you might say that, because we actually know what we've got now, don't we? Because last time we didn't even know what the rates were.
Yeah,
they hadn't released them.
Are out.
Yeah.
The big guns are out, and so yes, we've got people like if you're looking for a 2-year fix at 95%, then digital mortgages by Atom Bank have got 3.94.
Okay, now this is interesting, because you said before that you did think that these would be priced at or just under 4%. So you're spot on, aren't you? Yeah.
Yeah. 3-year fixes, Santander 3.99. 5-year fixes, Coventry 3.89.
Wow.
And you've got Accord, Bank of Ireland, Santander, Halifax, all around the 4% level. So the good news is there are options.
And apparently take-up of these has been quite good, from what I'm hearing. As in, there's been a
lot of inquiries.
Yeah, yeah.
So there are some strict income multiples around it, as you'd imagine. So no one's lending more than 4.5 times. In terms of that, you need a really good credit score.
Yeah.
So these are all things we thought would happen and are sensible, of course. If you're lending that, you want to lend it to the right people.
Of course.
So that's good. That's the activity is there, but you've still got, on the other side of things, if you've got a 40% deposit, 2-year fixes at 1.06, 3-year fixes at 1.2, and 5-year fixes from 1.24.
And before people who sit there thinking, I need a 40% deposit, I don't know anybody who would have that. if you bought your home 20 years ago, which now, as we've chatted about earlier, according to the law of averages, may well be the case, imagine how much equity you've probably got. So this is the thing, it's that whole, just don't think that deposit means deposit. It doesn't mean you had to, in most cases, a deposit can also be equity in your current property. And that's what people need to speak to a mortgage broker about, to understand what they've got and how they can best proceed.
Absolutely. Maybe we'll cover that in a future episode.
Probably should talk about that. Actually,
how much can I borrow? And how that works.
Yeah,
because that's the biggest question we always get. But we are out of time.
I don't know where it goes with you, but it's always brilliant. It's always lovely chatting.
Thank you. I really enjoyed that.
Well,
so thank you very much, Lou, as always, and thank you for listening in again. If you like what you hear, please give us a rating or leave us a review in your podcast app.
And don't forget, we're here to help with your property problems and mortgage dilemmas. So if you would like our advice, please do drop us an email to hello@theproperty-show.co.uk.
And if you want the very latest on the property market from the two of us, please give us a follow on social media. You'll find us on Twitter @thepropertyshowpod.
Thanks for joining us. See you next time.